All right, guys, welcome to class once again. Basically, the last time we met, we refreshed on coordinates. Sorry, we refreshed on flipping of participants. That is flipping of buyers to sellers, flipping of sellers to buyers, and all that. So that's majorly what we did in the last class. And then we proceeded into understanding how to actually write coordinates, okay? So coordinates are simply the resultant participant at a certain high or low after considering what? After considering flipping or no flipping and whatnot. So that's majorly what coordinate is all about. Okay, which means the major thing is to know how to write your signals correctly. And that's why we spent like 2 classes explaining signals, because that's the major thing. You can really get the signal if you really understand how to write out your signal for the open of a day or a session and whatnot. So majorly you will understand how to write coordinates. Okay. So coordinates are just the resultant participants at a certain high or at a certain low after you consider, of course, obviously from the opening, and also you also want to consider flipping. And apart from flipping, you also want to write your coordinates based on the highest volume participant around that particular high. That is, some highs might involve we considering the monthly relationship based on maybe a certain new month is raiding a certain previous month. Okay, that is maybe November 2024 is raiding a month from January 2024. So that's basically that, right? So it is all about the participants in there who are actually around that high or that low. So that's basically what coordinate is all about. And of course, I made us understand that coordinates can just even be sessional relationship. For example, if you are within the same day, of course, you are within the same day range. That is, a certain high has been established for that particular day and a certain low that was initially established. Not necessarily that is the total high of the day or that is the total low of the day. No. But for example, let's say we have let's say Tuesday and we have Wednesday. All right. So majorly we have Tuesday and we have Wednesday. So basically, this implies that let's say from the previous day, let's even assume that divergence has already happened there, which we will talk about shortly. All right, that is between this new day, there's already divergence, full divergence, and whatnot. Basically, you now meet price here. Price has not cleared this low. Maybe this is when you come to the chart. So we are now within this new day. This is the high of the new day, Wednesday. And this is the low of the new day. All right. So in this regard, there is no weekly overlap or no. We are just simply within the same daily range. So obviously, the highest volume OR to consider here will be sessional. So that is, maybe the session you are coming is New York. All right. So maybe the session you are coming in is New York. So you want to see which of these maybe New York is positive and maybe London is also positive then, but Tokyo is negative. Maybe this is from Tokyo So you know that, okay, for continuation, this is the high that will probably be used. Though there is more to that when it comes to liquidity that price is seeking, which that one will not be today, obviously. That will be tomorrow, because to introduce you to divergence is a big work itself. And yeah, so that's that. So majorly, that is just the thing. So it is all about, so here now, all you need to write is just the sessional. We are within this same day high, irrespective of this day high and low, right from when you already have the information that maybe price has already diverged against this particular low and price is targeting it. So definitely the only thing you want to consider here is just what? Is just sessional. So let's say S plus and S minus. So something like that. So that's basically what that is all about. So that is everything about coordinates. No much time to waste. We can't beat about. That's why you're asked to do your assignment. And of course, in live sessions, you'll be seeing live application of it all. So this is just a boot camp to enlighten us all. All right. So having said that, the next thing we want to look at is divergence. So not just divergence, but HORC divergence. All right, divergence. So what are simply divergence? Let me just explain before I go to where we have that. There are two types of divergence that we have in the market. We have the exhaustion divergence. All right, we have the exhaustion divergence. And of course, we have the momentum divergence. So we have the exhaustion divergence and the momentum divergence. So what is an exhaustion divergence? Exhaustion divergence is simply that which shows absorption for a reversal at the bid or at the ask. Remember, we have our ask AOI, that is, which people call supply order block or something. And we have our bid AOI, which people call demand, even though I've clarified the issue of supply and demand for you guys. But just for conventional sake and for everybody to be able to relate easily, that is why I'm using such language. But by now, I expect you to start rewiring yourself towards our terminologies and towards the understanding of the whole concept. So, for example here, so when price is eating into the what? Into the ask, all right, when price is eating into the ask area, what happened? You now see price, you see that price couldn't break through, and the divergence now happened, which is what we want to talk about. Then you know that what? Price wants to what? Price will sell. So it's simply a reversal divergence, all right? Another word would be a reversal divergence. That is a certain trend by aggressor, all right? Remember I told you guys that when it comes to, so majorly this divergence we are talking about is simply absorption. That is another word I use for it interchangeably, okay? So for example, you know, I told you imbalance is the limitation. That is aggressors limiting passive orders. Aggressors being the one in control. You see a certain valid AOI. All right. So you see a certain valid AOI, right, around this particular area. And when price get there, what happens? Price violated that particular AOI. So that violation, because this AOI normally is valid, ought to be respected. That violation is what? Is momentum. So momentum, which is always due to what? volatility in the market. All right, volatility in the market. That's why you see that most profitable SMC traders, they do run away from news. Only few of them trade an old trade, maybe the venture trade before news. Why? Because if you're on the wrong side of the market, if you don't really understand what you are doing, based on everything that you guys will be taught, if you don't understand what you are doing, definitely high volatility shouldn't be what you should be trading in. You shouldn't be trading in high volatility because a lot of imbalances will happen during that time. That is a lot of violations of area of interest. Unlike if when there is no volatility much in the market, just like this week, of course, you can easily still participate. And trust me, most of so-called valid AOI or other block will probably be, you know, will probably be respected during those period. So that is it. So imbalance limits the what? Limit the passive orders. Why absorption, which is divergence we want to talk about, is the opposite of imbalance. Absorption limits the what? The aggressive orders. So aggressors are limiting the passive in the case of what? In the case of imbalance, that is, they are violating them. They are not letting them what? They are not letting them get mitigated. Okay, so that is it, and that is why we now say price has to what? Price has to come back for such loss that has been opened. Price has to, though there will still be imbalance part 2 tomorrow, whereby you will be understanding the bid and the offer increase and all that very well. And that will help you know the perfect liquidity price is seeking within a certain range. The perfect, that exact liquidity price is actually going after. You'll get to understand that in our class tomorrow. So, but for tonight, we just want to start on our absorption, which is basically divergence. So absorption is a scenario whereby passive orders. All right, so let's just start already because I don't have time to waste. So when a reversal is about to happen, a certain high or low, below or above the valid AOI to be used is always cleared if price will reverse. That is, if aggressive sales that is entering a bid AOI imbalance, or aggressive buy that is entering an ask AOI imbalance, of course, that I said you guys call supply and demand, is to lose momentum and reverse to the opposite direction. Then price has to diverge 100% of the time, meaning buyers have to absorb sellers or sellers have to absorb buyers. Therefore, if the coordinates of the rated high or low, passive high or low, is rated by an aggressive move that carries direct opposite coordinates with respect to its, then price will reverse. This is called exhaustion or reversal absorption. But if the high or low rated has the same coordinates, especially as indicated by the highest volume OR, say monthly, while others are weekly, daily, and sessional in that order, as that of the aggressive move that rates it, then that is a true break of structure to continue the trend to the aggressive move, even though price might reverse due to an internal divergence. Due to an internal divergence, which I said will be discussed tomorrow, but that will just be a pullback for a continuation trade. This is called momentum absorption, as the aggressive trend does not change. Note that all coordinates from a passive low or high must carry opposite sign to that of the aggressors for a reversal to start. Of course, that makes a lot of sense. We just say now that what absorption or divergence is a scenario whereby passive orders are limiting the effect of what? Of aggressors. The only way I can limit your effect is to what? Is to carry opposite sign as you. That is it. That's the only way. All right? Is to carry opposite sign as you. To every action, there is an equal and opposite reaction. That is, when two forces are reacting at a point, they carry equal magnitude, but effective in opposite directions. So, and what signals a reversal starting soon is if the highest volume OR has diverged. If the highest volume OR has diverged and remain one or two of the lower volume OR to diverge, hence one waits till such also gets diverged. E.g., for example, if monthly OR diverged and weekly hasn't, while daily and sessional also diverged, then this means such reversal cannot start that week, except if the week flipped and diverged. Hence, one has to wait for another week, which will give the missing piece, e.g., if passive week OR is W minus, and the first aggressor OR is also W minus, then one waits for the aggressor week, that will be W plus, within the same month. So what is all these sentences? What are they saying? What they are saying is very simple. By now, we already understood what our coordinates are. So now, I have my AOI. All right. And then, before an AOI, there will always be liquidity. But the question is, this liquidity will it lead to absorption, or will it lead to continuation of aggressors move? Remember that what are even aggressors in the first place? Aggressors are the present trend in the market. That your pullback, that you call pullback, that is the present trend in the market. That is why I said there is nothing like high time frame as higher probability. That is one of the total bullshit in the industry. It makes no sense. On what basis? Because it is higher. Does that make sense? No. Anything that works for a range of 500 pips delivery should work for a range of 50 pips delivery, should work for a range of 5 pips delivery. Why would you tell me price is fractal when you are now saying higher time frame is greater than lower time frame? But of course, in the context, why most people say that is because it promises a bigger move, because you are now dealing with higher range of pips. So no problem with that. If you are not a scalper, if you don't really understand the engineering of the market, that is fine. But now saying that, oh, people that trade on a lower time frame are bullshit, that's where it seems not to make sense and to be right with me. Because basically no candle is showing you true information on chart. So either it is a monthly candle, it is not showing any true information. Even if you are saying of support and resistance, the same way a certain support can be respected on higher time frame, that in terms of the pattern that you trade, it's the same way it can be respected even as low as on 1 minute time frame. Just that from a zone to a zone on, let's say, monthly time frame could be 300 pips, but on that particular 1 minute time frame, it could be just 15 pips. So does that make it not to make sense? It makes it, so that's it. So that is not true. Okay. We have this eye here. And then we have aggressors that are coming its way. And then they raid it. When they raid this guy, for us to know if price will diverge, if price will reverse and continue the initial trend, because now When something like this happens, you are still trying to see it as a pullback, potential pullback. You probably don't know yet if breaking of this high is inducement, like the word inducement, liquidity that will make price reverse, or if you don't know if it is a true break of structure. So what will let you know if it is a true break of structure or if it is true reversal is the concept of what? HORC divergence. That is the concept of absorption. This is the valid AOI above. So what will let you know if this AOI will be violated, that is limited by the aggressors, that is this present pullback that is happening, or if it will be respected for a reversal. It is what? It is this high that will tell us the story, this particular high right here. That is what will tell us the story. All right. So basically, we have absorption. What is absorption? Absorption is saying after I've written the coordinates at this high, that is, let's say the coordinates at this high is W minus D plus S minus. Now, for the aggressors, let's say we are in a new week. A new week started here. The statement says, once the aggressors reach this high, you want to check. The same highest volume over here is weekly time frame. Is weekly, not time frame per se. Is weekly OR based on our coordinate. The first thing you want to check is that highest volume OR relationship. The aggressors that are coming inside this new week, what is the opening range of that week around the aggressors? That is, do they open as a sell? And before they come to this high, have they flipped to a buy? Or do they still remain a sell? So if, let's say, once price hits this, once I weigh this high, you saw W plus. The statement says, or the fact says, this shows you that absorption has started between this high and the aggressors. That is, the passive guys are absorbing the what? The aggressors. They are absorbing them. They are absorbing them. That is what it says. That is what it says. So the passive side are absorbing those guys. They are absorbing the what? The sell, the buys. They are absorbing the aggressors. So it is the W minus that are absorbing the what? The W plus, that is highest volume OR says sellers around the passive, and then we now have buyers coming in here. So sellers will keep limiting the effect of buyers. So that is it. So that signal absorption, but it doesn't end there. Now we have to check what is now the daily. So let's now say the daily is D plus and the sessional is also S plus. Absorption has started by virtue of what the highest volume OR shows us. By virtue of the fact that what the aggressors show us W plus, the passive show us W minus. So the passive being sellers and the aggressors being buyers will be limiting the what? They will be limiting the effect of the buyers. That's understood. But this particular day, let's say this day is Monday. This particular day, the volume, that is the intraday volume, because intraday volume is different from weekly volume or intra-week volume. It is different from intra-month volume. So the daily volume around this high, because you need to consider each of them. It is a plot of what? X and Y axis against the X axis. That is just the truth. So coordinates are important. What is happening at that event in time? Daily D plus, daily here also D plus. That means daily has not diverged. Divergence is simply what? Opposite signs. For divergence to happen, that is even the meaning of divergence. You have to have what? Opposite signs. That is, you have to have a what? A repulsion. They have to repel. They have to what? Repel. So opposite signs, they have to repel. So that's it. So that is divergence. So we have W minus, W plus. Absorption has started. D plus and D plus, no absorption. So this is to tell you that even though absorption has started, that particular day, which is Monday, cannot start the reversal because the significance of absorption is a reversal. So that means that particular day cannot start the reversal. So we wait till the next day to see. And trust me, the next day might be the same. Tuesday might come. Tuesday might come. And this means, and the question you want to ask yourself is, does that mean that you shouldn't trade that day? Of course, there is a free trade, a very free trade. And the free trade is that, my brothers and sisters, once price pull back to another value day, which we will talk about based on internal divergence, which we'll talk about tomorrow. Once price that come into that particular available liquidity around the aggressors, one price pullback, let's say this is the only available liquidity, maybe all these are not available. Trendline liquidity is bullshit. Don't mark all that for me. The question is, this low, was it available based on internal divergence that has been happening? So which is what we'll be dealing with tomorrow's evening. Oh, of course. In as much the daily has shown you that there is no full absorption yet, of course, you can take your buy after the available liquidity is rated and you will target back this high. It is that simple. It is that simple. So these are the things that seem to make previous day high, previous day low, previous week high, previous week low. This is what makes them seem to work for many people that are trading what? SMC. Because now let's say previous day, second day now comes, right? Tuesday comes. And let's say Tuesday now give that D minus. So for some people, if Tuesday now come and raid Monday's high, all right, and then price now shifts and price will surely actually sell as expected. But was it because price raid previous day's high? Was that the reason why price sold? No. The reason why price sell is because there was absorption. Let's say there was no absorption. That is when you see yourself taking loss. Whenever you use that previous day high, previous day low case, that is when you take the loss. Because there is no market logic behind saying previous day high, previous day low is liquidity. For many people, once previous day high gets swept like this, boom, they are looking for sell and losing and losing and losing without proper understanding of when it is being rated as liquidity or when it is not being rated as liquidity. So absorption, absorption is signaled by the highest volume HOR. That is it monthly that is the highest relationship between the passive and the aggressors? That is the first question you want to ask yourself. Immediately those two guys, that is the passive, the highest volume HOR between the passive and the aggressors diverged. Oh, then you know that reversal is around the around the corner. Then you know that reversal is just around the corner. All right, reversal is just around the corner. So what do? You check the other lower volume opening range to see if there is full absorption yet. So if there is no full absorption, you know that you have to wait for that particular undiverged OR. In this, my example, it is daily. At times it can be weekly. For example, since last week, absorption has started for April. Because April opened as a sell, and when price is coming back to raid April low last week by CPI effect, April has already flipped to a buy. So it was bias. So that is what we call self-divergence. Same month or same day diverging itself. All right. That is why you would notice that when you check through and you actually practice well, you will notice that most times when you notice flipping, price will surely most times go back to the opposite direction, except if another passive guy is involved. But let's say, for example, daily flipped here to a buy. It was initially a sell. So it means that daily, in as more buyers are now here, sellers were initially there. That is why you see that such day will likely what? Will likely come and raid this low, will likely sell. That is, it's self-diverged. Except if price now go to raid a certain high from previous day to that day. And now you know that you are not, it is not about the self-divergence again, but it is about what? Relationship. That is when we'll be talking about external divergence and internal divergence. But for tonight, I just want you to understand absorption very well. All right. So if Tuesday open, Tuesday might not even be what? Might even still be D plus. Let's say Tuesday has opened here. And Tuesday is still what? D plus. And we are searching for D minus. Trust me, price will just still keep buying. Because the absorption is not done. It is not. It is not done. We need a day that will give us negative. So let's now say the third day, Wednesday open. And Wednesday open as a sell opening range. Beautiful. Now we expect it's not as if you will not start selling. No, it has to come and raid this high because the raid of a high or the raid of a low is what signals what? Absorption. So a high has to be raided because that is what we call the diagonal rule. That's what we call the diagonal rule. These guys are now forming a trend line. Daily here, D plus, daily here, D plus, but we are searching for what? D minus. So this is what form all these are reversal pattern. Like your wedge, like your, head and shoulder, all those things. What form them is this? Is the understanding of this. So which means if I pick head and shoulder and I tell you that Okpeoluwa, go and be trading head and shoulder. But you already know which head and shoulder will be valid. How? Because now you understand absorption. So you will know if this type of head and shoulder that is forming is actually for a reversal or is for continuation. That is the beauty of my concept. Automatically, I am trading every pattern you see people trading in the SMC world. Automatically. Some people will even think when I mark my chart, it is SMC I used to analyze. In as much because obviously the only thing you see on my chart is just a straight line and my projection. But they don't know that there is something else I'm looking for. The absorption. Before I take my own what? Sell or buy. Absorption. All right. So this is what form all these reversal pattern, 3 touches, a trend line, and the likes. So you now have D plus here, right? You have D plus, and you are looking for D minus because of the passives that are here. Because if you keep, the reason for this is that D plus will be reinforcing the bias inside this passive and making price to push higher and higher. So, and you have D plus here. So the D minus must come. It is a must. It must come to the what? To the trend line. It must reach the previous day's high. It is a must. It cannot just exist inside and now start working. No. No, that reversal has not started that way. If you see it doing that and coming down, it simply means maybe it is seeking maybe some more internal liquidity that probably you didn't see here. And when it seeks them, it will surely reverse. All right, so that's it. So D minus, once you find that, oh, that particular day that gives D minus, of course, is now what we give our what? Reversal to the downward, to the downside. So this is absorption. I will go further to more examples because I want you all to understand very well. Let's look at another case. Tuesday, Wednesday. So Tuesday, Wednesday. All right. So we have Tuesday form its high. So the highest volume area is daily. So at the passive ESA, we have D plus, S minus. And the price comes to read it. We now also have D plus, but S plus. In this case, absorption has not started at all because the highest volume OR does not diverge. It doesn't. So there's no absorption. The S minus S plus that you see, that one is for internal divergence. It is only to pull back to a certain divergence that has happened internally and therefore continuation. So here, this is not absorption starting. Absorption is to be signaled by the highest volume OR. So that's it. So same way, if the day is now D minus, and we now have even S minus, of course, you now know that they are diverging. That is if this is the highest volume OR daily and daily. Okay, that's very important. So now we know that what? We have absorption starting. And let's say this happened in London, thereabout. New York also came, and New York S minus. No bias. There's something I'm getting to. After New York ends the day, of course. Then trust me, when another day open, even though the divergence has started, and highest volume has diverged, that does not mean that particular day must start the sell. In as much it is the highest volume OR. Very important. Highest volume OR wholly, not missing volume OR. For missing volume OR, if it is found, then it will be the one to start the divergence. But for highest volume OR, it doesn't matter. So what do we have? Another day can come. And in this other day, you don't care again if that one is D plus, D minus. You don't care again. If it is Tokyo of this new day that now produce that S plus for you, then so be it. That Tokyo will be the one to start the reversal. Now, the question is, why is that? Why is it that the OR of this new day, even though what we were searching for from the previous day was just sessional and we couldn't find it, why is it that the OR does not matter? Oh, of course, it's just common sense. That's because for price to wait for a new day before it produces what will complete the absorption that we are looking for price to wait for that particular new day. This is to tell you that probably the absorption that is happening here between these first two is not complete. That is, there is still one of the parties being deficient. That is, if the new day that is coming is D plus, it means that there were not initially enough buyers to complement the cells that are being absorbed. That is the implication. Or if the second day is D minus, it simply means there was not enough what? Enough cells to be absorbed in order to cause a complete what? Auction. That is it. It is that simple. It is relatively that simple. So basically, you wait for H plus, and then you take your sell. And this go like that for monthly itself. It's go like that for monthly. This month now, we are searching for weekly for us to have a very massive swing buy. Last week, W minus, give us. This week, price flipped. Yes, price later flipped to a buy. But that buy did not go to clear the lowest low. Remember the diagonal rule that I just stated. It did not go to clear the lowest low. And today is Friday. Market is closing. And obviously, there is no more volatility that can push that for tonight again. Today is Friday, right? Yeah. So that's it. So which means that we have to wait for next week again to start telling its story. Because this week still does not give us what we want. If next week still comes, and what went ahead to clear the lowest low, that is last week low or this week low has formed the lowest low presently. If next week comes and what still go to reach that lowest low is still W minus, that is sellers, then trust me, it means that our reversal cannot start this month. All right. So that is majorly the thing. So when you have your missing piece, all right, even though the highest volume OR has diverged and your missing piece is not yet there, then it means that there is not enough volume to cause that reversal yet. And most times when you see that happening is when price wants to move in 3 steps for the highest volume OR. Most time when you see that happening is when, let's say it happens for monthly now, then it means that, trust me, it might be till the 3rd month after that. When we'll be dealing with HPO3, I'll be talking more on that. That this price can keep selling till June before the reversal happens. Yes, it is very possible. We'll talk about these things, but I have to take it slowly because it is a lot. It will overwhelm you. I will not say it will not overwhelm you. That's why I'm taking my time to explain it slowly so that you won't all. So you are doing yourself a big disservice, a very big disservice, if you are not digesting the concept immediately and doing your assignment. You are doing yourself a big disservice. If you are trying to crash read, that is, you want to crash study, for you, it's just like, oh, let them finish the boot camp. Let me just absorb it once and for all. You will have issues. And like I said, if you are given assignment, you do not do it, and you now say you want to book a session with me, I will not answer you. Because your assignment is how I check. Even if I don't mark it, I check it. It's how I check where you are where you are lagging as an individual. So this is not a collective thing. Some people will get it once. That is how life is. The same way you are taught in school. No matter how hard the teacher tries. Some people will get it once. Some, it will take a longer period of time. So you that now know that maybe it even takes you a while to understand something, and you're now still the one piling it up, that until after boot camp. And after boot camp, there is still some excuse, some things happen at home. Yeah, you now say you don't have time or that you fall sick. Then that is not my fault. Because you do not pay me to force you to be disciplined. No, you do not pay me that. The payment you made to me is to release my knowledge of the market to you and to teach you very well and to also show you the practicals, which is in live sessions. That's what you paid me for. Once I show you the live application, you see the consistency, I teach you so well like this, then you should know that every other thing that remains is you. So that's basically it. I want to stop here for tonight. I don't want you guys to be stressed by it, but I will just show the example of what we've discussed, and then we'll round up from that tonight, okay? So I want to stop here for tonight. So I don't want you guys to... So look at this. So from the previous week, of course, I've told you the thick, oh, sorry. So of course, I've told you the thick broken line are the weekly separator, while the thin ones are the daily separator. So this is from Friday of the previous week. So Friday's low from previous, which is our passive low. That is that low that is already made. I told you a passive simply means even 1 hour ago, even 5 minutes ago, if a certain low was made, even just 1 minute ago, if a low was made just 1 minute ago, and another low come to raid it now, this particular move that came to raid it is the aggressor. That particular low that was formed just 1 minute ago is the passive. It's already passive because it has already been reviewed. All right? So that's it. It has already been reviewed. So Friday's low, W plus, D minus, S plus. Interesting. This particular week opened as a buy also, but flip here to a sell. This was its flip point. It flipped to a sell. And this was also Monday. So which means Monday assumes the opening range of the week. I said that in the last class very extensively. I said that. So it flipped to a sell. That is, those that came to reach this low are not buyers again, even though the week opens as a buy. But who come to raid? The participant that came to raid the passive low or high, they are the ones we are actually interested in. They are the ones we are interested in, all right? They are the ones we are interested in. So, this is the passive low. And the ones that came to raid this are the aggressors. So, what is the nature of the aggressors? Of course, they flip here to sellers already. So, all these move from this low, are by sellers, not by buyers. But above it are by buyers, which means this I is W plus. The low, what is raiding it now, since this is the flip point, is W minus. And of course, since we are still on Monday, that will also be the D minus. But of course, sessional is different. So don't think that is why we have S minus too. Remember that within a day, we have many sessions. So you check session on its own. So now session absorbed, S plus and S minus, they've already even started absorbing. The highest volume over absorbed, W plus and W minus. Okay, but D minus, D minus. D minus and D minus, showing you that what? Absorption is not done, which means price still wants to sell more. So that's why I told you that you can take this sell. Why not? Because that is telling you when there is no full absorption, then it means that the break of this low is still a true break of structure. That is it. But if there is full absorption in you guys' language, full absorption is what you can call inducement. That is liquidity, the rate of liquidity. It is full absorption. But if it is not full absorption, then it is just a break of structure. It is just a break of structure. Because price will still continue. All right. Based on the missing what? The missing volume opening range. Right. So Tuesday, of course, they have every right to sell it higher. So Tuesday, eventually, those that now came to rage this, I don't know if it's flip or not, I've forgotten now. But those that come to rage this low, this absorption low, because absorption has already started. Now we are interested in this particular low to be raided by the missing opening range that we are searching for, which is D plus. So we're searching for this D plus. So Tuesday opened as the so-called D plus, that is, it was D plus that came to raid our low. So beautiful. Our buy started that day. I held that buy from this particular day into the next day, and FOMC happened here, and I did not even get moved at all because I know exactly where price is going. Where? This. Because this low is what creates this high. Though I have not explained that, I will be explaining that under external divergence and internal divergence. But your target is this high, not the overall, because this was internal divergence. Because some certain low that was later rated by this move is the one that can cause external divergence, that is complete reversal. For this, it was just internal relationship, just to come and read this low. So there are different between the two. So that is it. So internal divergence is more like divergence between what? Between aggressors. Because the whole of this sell move as a swing is actually still in as a whole the aggressors. That is, they were serving as a potential pullback against those passive at the very left side. So that is it. So internal divergence is simply, in a good way to put it, is simply divergence between aggressors. Aggressors are the present trend. Why external divergence is divergence between the aggressors and the passive. The aggressors and the passive. Okay, so that's majorly it. Daily was the word we were searching for there, and that's it. So tomorrow, we have this guy. What I would advise you to do, you don't need to bother about absorption yet. It's a straightforward thing for the introductory class we did tonight. What you should bother about is still writing correct coordinates. If I were you, I would spend even 1 month perfecting that, writing coordinates. Once you know how to write your coordinates, every other thing we will discuss is very easy. Very, very easy. Every other thing, HPO3 is just from a point of absorption. So how do you now understand absorption if not with writing proper coordinates? Once you can write your coordinate effectively, I will advise you the next 1 month you want to give it to practicing and perfecting coordinates alone. So with that being said, we round off the class. So do you have any question before I call it a night? And that was the class.